Monday, October 23rd, market analysis, Stan Ehrlich. Hey, we've got some turning points in progress, it looks like today. I'm starting out with the E-mini December futures contract as usual, the stock market indexes in general. And you can see that this morning we drove into new low ground since what I have been claiming was the October low, and that was on October 6th. A bullish engulfing. ER buy signal fit the bill at the time perfectly and worked for a week or so. But now we see this today, this morning, Monday morning, new lows for the move down, not reaching the old objectives for the previous head and shoulder, which really is kind of out of the picture at this point, but new lows and getting oversold. Critically important. So my bars or candlesticks turn yellow to warn you that oversold conditions exist and the market is in a position to turn around. Since this morning's opening and first sharp decline, we have had a strong rally and we are now higher on the day on the S&P by 293, almost 3 full points on the spider at the moment. The DIA is up almost a point, and the Qs are a little over 4 points higher at this moment. So with the E-mini delayed data, we are up 21 and doing very nicely, and I expect to see new highs on this because it's a little delayed data. Now, the next chart is the spider, and it is the DIA, the ETF for the S&P 500, and we have a new low also into a support area with oversold conditions. So our bar turned yellow, and we are more than halfway up into Friday's range, and this could go down as a double bottom from the early part of October, but now this is the potential new October low date. I'd love to see this market get above Friday's highs, and that would cause at that tick my real-time ER signal to turn green, and we would go long an ER1 overnight and scalp trade. That's 2 trades, ER1, 2 versions. That hasn't happened yet. So next chart is the 1-minute chart on the S&P 500. I'm sorry, yeah, but the spider, and our code turns the bars on a 1-minute red, indicating that it is with an RSI level over 95. We're very, very likely to see a short term. It may only last 10, 20, 30 minutes or an hour or two, dip down to start, and that might get back down to about 423 exactly. Wouldn't be surprised. Next chart is the QQQ, which almost has a bullish engulfing. Now, very, very unfortunately, the RSI level got down to 2517 this morning at the low, and that is not quite my oversold level of 25 flat, so it won't turn green. Pretend that the RSI was 25, it came so close. We would have a double bottom with a green bullish engulfing if it got above Friday's high, which hasn't happened yet. But now we would still have a bullish engulfing Japanese candlestick, which is a buy signal, but not an ER official because of the RSI lack of exact oversold conditions. But we came so close. So I think this is the turn. I think this is the October low, whether it's a new low or not. It was either October 6th or, in this particular case, so close it's ridiculous, and October 23rd. So it's a combination this year, or you could pick the lowest of the two. Either one will do. Next chart is NASDAQ futures, made a new low, did turn yellow, did get oversold, is more than halfway up in yesterday, that's Friday's range, and is touching the bottom of a downward slanting wedge, which apparently now has 5 points on it. You need the 2 to start the trend line, of course, the bottom of the formation. Then it was tested twice more, end of September 27th and October 4th. And today, there are 1, 2, basically 3, 4, 5 points across the highs. That is a very well-defined downward slanting wedge, and it's not small. It's a pretty big one. July, August, September, October. Yeah, 4 months. That's not so small. It looks good. These formations usually break out to the upside. Next chart, DIA did not get below October 6th, October lows, but it got oversold, and it is a potential double bottom. And if it gets strong enough, it also will turn green because it got oversold. Next chart, the Russell 2000, different situation here. Okay, it got oversold. That means it will turn green if we get above Friday's high, but this low is a new low since last October 13th. It's a new low for a whole year. None of the other indexes did that. It's very close to a huge, important support level, and it is generally in a big, okay, I'll do this for you real quick because I know exactly what I want to do. Gigantic new long-term historical support, and there you go. So this red zone embodies lows of different levels, but in this one range, almost every single time it's gone down to this level since almost 2 years ago, a year and a half at least, year and a half ago. Quite a while. Next chart is the QQQ 1 minute, and it's doing very well, but it's topped out. Let's see if I'm right about my little 1 minute commentary on the red. Oh, yes, indeed. On the 1 minute scalping spider chart, I told you when it got red, it was very close to a rally high because of a 95 plus reading on the RSI, which is our custom relative strength index, modified because I like it better than what Wells Wilder himself taught me back in the 70s and 80s. Now, the October lows for the S&P 500. This is my original chart that I did about 2 or 3 months ago. I wanted this to be the dead bullseye of the low of the October break and the beginning of the next bull move. Now it looks like I can talk about 2 different dates. One, of course, is around the beginning of October, or the bullish engulfing on October 6th. But today now is a new low for the trend down and oversold, and definitely looks like a turning point, whether it's going to be a green bullish engulfing ER buy signal or not. It still looks good at this particular point. I do not want it to go down below the close of Friday. It will pretty much erase what I've said so far this morning for the last 9 minutes. Okay, futures, futures, futures. We've got the E-mini again, different perspective, broad area of support, turning yellow. That means the market is likely to turn up, but I don't know for how long or how much. Only that this is a turn, probably. Next chart is NASDAQ touching the bottom of the wedge or downward slanting pennant, same thing. And almost having a bullish engulfing, but not quite yet. Next is our previous fantastic new short position on bonds near the top of the whole market way back in April, and getting out about a week and a half ago with a gigantic profit, a very long-term trade for me, 6 months. Guess what? Today, we have a new bullish engulfing buy signal, official green, new long ER1 overnight, and scalp trade on the books right now. I'll show you the chart right there, going back to the daily. So we are long. a little bit above the high or right around the high, depending upon the next tick or two of yesterday, Friday, I meant. And this is it. Now, it's either going to work or not work, obviously. There's no guarantee these things make money or are actually the lowest low for quite a while. This looks great. Divergence is significant. Everything is in place. I think this rally will carry up to at a minimum of 114.5 without much trouble at all, and maybe up to 119.12. Now, when we get to 119 and change, how it acts and maybe overbought at the time, and that's a few weeks from now, a couple, 3-4 weeks from now. How it acts when it gets there is very important, because if it continues to, over time, maybe another week or 2 or 3, rally more and eat into this very substantial resistance area, which lasts all the way up to about 134. If it does that, we are in a long-term bull market. Next chart is that trade at 7:21 California time today, October 23rd. We bought the bond continuation contract for the from the strategy point of view at 108.31. So call it 109. Easy to remember. And currently 10:01. We got a full $1,000 profit in it right now for a scalp trade, or we're going to keep it overnight and see what happens. So they're both getting long at the exact same moment in time and date, et cetera, and price and reasons. High and last on the bonds is certainly not bad for the stock market indexes. Both of them have either signals or potential signals. Next chart, 10-year notes. Same damn thing. We have a bullish ER green buy signal, official. We are long from the high of Friday, a tick or so above it, and the 10-year notes got long exactly this morning at 106.07.5, and that time was 8:21. A scalp trade is easily profitable if you wanted to get out now, but remember, we're not getting out yet. We get out on the close unless it gets stopped out before then. Next chart, crude oil. Top building, maybe, maybe not. I really can't tell. This is a little confusing for me at the moment. So I'm not going to come up with more than the fairly obvious. For most of the year, March to April, May, we have had lows that are higher and higher and higher. Most of the time, we have had highs that are higher. Now, that sell signal worked very good, but it was only 2 or 3 weeks it went down. And then the longer-term bull came and pushed the market into new high ground totally. So this is a bull trend. This downside correction probably would lead back to about 82, 83, and then turn back up again. Next chart is natural gas. We are still short in an ER3 trade I'm showing you now, because ER1 got short on the day it turned red, like I talked to you about in bonds and 10-year notes. And maybe later in the day, I could have the same thing to say about NASDAQ first, DIA, then maybe the spider, or in that order, potentially, if they keep going up. Right now, up 250, up a half, and now up 388. So they're hanging in there. Now, the short position in the natural gas, we're getting oversold. We turned yellow today. We're not down to a support area yet, but we don't have to get there. Now I'm very concerned that we're about to get stopped out on our natural gas, but it's been a fantastic new short. We sold the opening and it had a profit on the first day, second day, third day, fourth day, fifth day, sixth day, seventh day in a row. And now today's the first day that we're getting a rally at the current quote. And gosh, it's oversold. So I'm expecting to take a really nice, profitable 2-week trade maybe out of this very soon. Next, heating oil. You know, big, gigantic sideways trading range. Last time it made higher highs. It got overbought, failed, got oversold here only 2 weeks ago, rallied. We're a little bit above a support area. I like the idea that it's going to try to make new highs again. Next chart, gold. Wow. At the bottom, bullish engulfing ER official buy signal. At the bottom, same comment. At the top, sell signal, high day. Another buy signal that worked a little bit, a very tiny bit. And then that one actually made a little loss, but the scalping version made some money. This trade that we are out of as of today, we sold out today, October 23rd at 1,986.90, and we bought it about 1,845.70 on October 6th. End of story. Overbought, looks like it's topping out in an area of resistance. Gonna have a pullback maybe to 1940. Next chart. Gold trade in detail. This happens to be the 10-minute chart. That's where we bought it on the way up for ER1. The trailing stop was slowed down on purpose by me a day or two ago to show you the flexibility here. But I decided to leave it alone, and we finally got stopped out. Let's see what happens next. We're trading just a tiny bit higher at the moment than where we got out. Next chart. Silver. Unfortunately, no buy signal at the bottom, but oversold at support is one of my favorite combinations. Great sell signal, great buy signal, great sell signal, great buy signal, great sell signal, great sell signal, and a great buy signal. Next chart. Great buy signal, great sell signal, and a great buy signal. This is platinum. The precious metals have been fantastic for our system this year. We are still long on an ER1 trade, a tick above the high of the day before the engulfing, and that would be around 880. Our stop is down here and probably has moved up. Probably not. Probably still there. And we're waiting to get stopped out. Still bullish, still looking for higher prices. High-grade copper. No signals lately. A small profit for a day or two. On the bottom, sell signal on the top, buy signal on the bottom. Longer term, I think this market will work its way lower. Right now, it's just beginning to touch resistance and could go up a little bit more, and then I think it's going to turn down. Next, soybeans. We had a buy signal at the bottom of the break on October 12th. Friday was the highest high since October 12th, and it closed lower for a little bit of a reversal. We're slipping off a little more today, but not stopped out quite yet, and still a profitable trade. I'm looking for the support area, which is around 1280 to hold and turn back up, maybe even a little higher than that. Next, soybean oil. We had a short trade back on October 21, wrote it down through the neckline, 2/3 the way down in a bear market or a bear head and shoulder top move. And we are now almost, but we're not short anymore. We're almost at a new low close if we stay here, and almost at the low of the day. So I'm expecting new lows, and we might even break into new low ground completely. Too bad we're not still short. We could have slowed down the stop if we wanted to, and stayed short, but there's some, I got a bullish engulfing here, and I should be getting out and going long, but we were still in a short trade, so all we did was let it go and get punched out by our stop. So I'm bearish at this point because the head and shoulder top is still working perfectly. Next chart. Meal. Overbought now. Fourth day. In a resistance area. Probably should drag that to the right a little bit. There we go. And I'm expecting it to be turning down. If this made a new low by any tick, then we would have a bearish engulfing ER sell signal. Looks quite possible. Next, we got corn. It got above resistance into more resistance. This is just the beginning of the very broad area of it. and then flip-flopped on Friday straight back down into the little trading zone I had marked off. And I'll drag that to the right a little bit more. There we go. So I'm expecting new lows, and I think corn's going to go the way of wheat, which is new lows, new low for the trend. Wheat got oversold a couple of weeks ago, rallied a little bit. I'm expecting it not to rally much more, maybe up to the resistance level, drag that to the right also. And, not much more than that. So we're encountering 617, if it can make it there. And it will turn down, I think, and make new lows. Next is live cattle. What a crash today. We broke through support. We gapped down to begin with. And that now, because of the size of this decline, looks like a breakaway gap, breaking away from a little support area. Still, gaps are usually closed, so can't rule that out. Breaking support, dropping off to new lows since late June. Quite a while, several months. I would expect it to come down maybe to 171, but there's a chance that about 174. And we're at 178, low and last almost, could stop the decline. So I'm looking for 174 to 171 and a half in the next day or two or three this week. Now, live hogs are oversold. And so was, I have to mention, yes, cattle. I went backward one chart to cattle again. It's also oversold. So it's going to turn around very soon, I think. And sorry about that. Hogs oversold 2 days now, starting to bounce back up a little. No particular reason why this price level, Friday was going to stop it. I could expect a little bit lower, but it's close to, or it is turning around for a rally, and that'll probably be up to 69.70-ish. Next chart, OJ, higher high again. I read some articles on the California crop in the last 30 years has been losing ground constantly. Every 2 or 3 or 4 years, fewer oranges, more problems, more hurricanes. Now we got this green something or other disease. Brazil's been taking over completely, and the chart is one trend down in Florida OJ production the last 30 years, and the exact opposite for Brazil. So we're getting our oranges from Brazil now for mostly about a decade. Next, and that's why this chart of domestic OJ is not stopping, and I have no idea when it's going to do it. I got a sell signal a couple of days ago. We got stopped out. We had a small loss. And cocoa, overbought, new high ground, couldn't hold it so far. Now it's back down below this little cyan bluish line. And if it stays there, we just might see a minor high here because of the overbought condition and the previous top, which was on September 15th, a little over a month ago. So that's very interesting. That's about the best comment I've got. Otherwise, overbought conditions in coffee at resistance, smack dab at the top of the resistance area. And I'm expecting to turn down, well, pretty much immediately. Next chart is sugar. Bullish engulfing today. Higher lows over a substantial amount of time, about a year or maybe more, and higher highs. So this, I think, is going to chop right into new high ground again, maybe this week. Next chart is cotton, the rag, oversold conditions. Now, today, we have new highs for 3 days. The trend is ever so slowly turning a little bit more bullish, mostly because the lows ever since a year ago are higher, and then higher, and then higher, and now higher, maybe, because it's only a day old, a low, higher again. So if we get back up to 190, this could be the time that we break through this and go up. Cotton could be starting something really big. Next, bullish big. E-mini again, pulling back very slightly. We're now 180 higher, just a few ticks higher in the DIA, and only up 335 in the Qs. I'll leave you with that. Interest rate futures turning around, I believe. Stock market indexes also turning around, and in most cases, we got a new October low today. Thank you. Have a great day.